Good morning. It's November 7th, 2023, and this is Jeff Wright, one of your ambassadors from Ninjacators. We'd like to review one of the S&P 500 futures trades that we participated in this morning. And before we do that, we do want to remind you that all information in this video is provided for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. Now, what I'm going to do is I'm going to bring over my live chart of the S&P 500 ES chart. Let me get this centered on there for you. And one of the things I noticed this morning, this is a live chart. And you notice this green candle. That's called a HEREBY. That's a HEREBY bearish candle. We did get a vertical thin line, and if you recall from previous videos, that's when our 15 crossed above the 30 EMA. And then following that, we got a solid green line, which is the 30 crossing above the 60 EMA. So that's by itself bullish. But we had a couple of other things that made us a little bit suspicious, one of which is the 5-day moving average, which is this dim gray color line right there, is sloping down. And so we were a little suspicious about that. But then when we got this red candle here, which is the bearish HEREBY, that really caught our attention for a concern about maybe a reversal down. Now, we did get very strong volume on this long candle right here. And of course, that sometimes can be an exhaustion candle on its move up. So let's just progress this candle at a time and see what we might be able to discover. We see that we have a continued move down after that bearish HEREBY candle, the red candle. And we have... came down and touched the daily VWAP, which is the solid magenta line right there. That's the daily VWAP. And continue moving it forward one candle at a time. And you notice that here's where I want to show you something. Notice all of the isolated highs and lows we're beginning to get. Kind of an area of indecision at this point. See where I put that dot there for a isolated high. And remember, just as a matter of review, the candle here has the high is higher than the high of both the preceding and the following candle. And its low is higher than the preceding and following candle. That's a perfectly formed isolated high. And then we had an isolated low down here, and then another isolated high. So I drew these manually, and I put the horizontal lines at their pin highs and pin lows, because we're looking to see what the candle, price candle does relative to those levels, whether it closes, above the high here or closes below the low down here. And let's just keep progressing this one candle at a time. And okay, we have a pretty strong move down here on this candle. Notice it came right down to the isolated lows right here and closed right there. And what else is important here? You can see the RSI moving average is rolling over right here. And it's still not below its 50% level, which is, if you look at the left axis over here, this is the RSI. And as I said in my previous video, I like to put the RSI overlaid on the price chart itself rather than down here in the indicator panels. And if I'm going to go short, I like to see the RSI fall below that. And we've had price moving down, and if we look at reading our trend dots, you can see that right here we've gone into a trend pause, and that's defined by the candle closing below the trend dots, and the trend dots still in this case, angling up. You can see this trend dot's higher than the one before, so that's a trend pause. We're not into congestion yet. We're not into congestion really until this candle right here that closes below the trend dots, and the trend dots are at least even with one another or sloping down. So that would be the entry of trend congestion right there. So we want to look at our defined congestion channel, which is defined by the isolated highs and lows. And the most recent isolated high would have been this candle right here. So that would define our congestion channel high, and our isolated low was right here. So there would be our congestion channel. Now, the next candle, which is right here, gave us another isolated high. So we drop that congestion channel upper defining level, we compress it. So here was, we had one here. Let's see where we had one up here. And now we have one here, so I'll go ahead and advance it one candle so it'll become clear. You can see that this is an isolated high right there, so we brought down this horizontal line right there, looking to see if price can break above it and close, which it did not. This is the candle that closed right at the isolated lows right here, right? So this remains our isolated low congestion channel definition level right there for the low side. And then what really caught my attention is this gap down right here. As a matter of fact, I took an aggressive entry and entered on that gap down. And you can see the gap right there. It opened, gap down, came back up, just tapped it, and then as you'll see, it progresses to the downside. So let's advance it one more time. You can see it's moving down. Now notice that what we're beginning to see is our vertical lines. We have both a thin vertical line, so now our 15 crossed below our 30, and the thick vertical line right there, the red one, is the 30 crossing below the 60. So we're getting confirmation of this move down, together with some volume that's above our 10-period moving average. This dash line, this horizontal dash line, is reading the last 10 volume candles and giving us an average of that. And you can see that it's poked its head above that average. So that's also confirmation of some negative bearish action. So the less risky move than the one I did, where I got in on that gap down, would be on this pullback right there. Remember, I talk about looking for pullbacks after the vertical, in this case vertical red lines, the thin and the thick one right there. So there would be the ideal entry right as it came back up and tapped our trend dot right there. And so let's just see how price behaved after that. Pretty substantial move down, right? And there's a huge one down. And whenever I see a candle that big, rather than seeing that as a definite suggestion of a further move down, I wonder whether it's an exhaustion candle. I mean, look at the size of this volume right here. And let's just mark what sort of movement we might have had. Now here's where I got in here. And we had a maximum favorable excursion, as they like to say, of $350 on one mini contract, because this is the ES, not the MES. Let's just see what happens after this. Okay, a little bit of a hesitation there, the long candle. And there we've got, and ignore this word bullish down there, because it's reading the current live state, and that's a number of candles, because this is, I guess this is showing at 6:42, and right now it's just about 8 o'clock. So this is reading what's happening at 8 o'clock, not here. But what we do have here is you could consider this a doji, but it's also a hammer candle. And here we've got a move up. Let's just take a look and notice that our RSI has reversed up as well right here. That's an RSI average. And we've got a engulfing candle to the upside. We also have a tweezer. We marked a tweezer bottom right here. And that could be a suggestion for a bullish interest. And we've gone up and we've touched that magenta VWAP. And notice that our RSI at this point, our RSI average came up to its 50 line. Again, remember that's off this left-hand side axis, the y-axis over there. So our RSI came up to that 50 line, and at the moment rolled over. I say at the moment, back at about 745, with the price moving down below our trend dots. And there we have a bullish harami right there. Remember, we had this bearish harami, the red candle, and we had another one over here, by the way. You can see that red candle when we had a subsequent move down to some degree. So that green harami would suggest maybe an interest in going long. And there's brings us up to the real time right there on our chart. So at 8 o'clock, 7:59, oftentimes what I've observed is a price seems to want to push to the north, wants to go in the long direction. And that's showing at 8 o'clock, and we're at 7:59 right there. So pushing above the standard daily VWAP, which is your magenta line. And so again, we had this bullish harami candle right there. What else do we have? We had a tweezer bottom right there. We're above our trend dots. Let's just look at how we might have read these trend dots. Let's say that you got in, let's see, we've got our trend dots here. We had a close above the trend dots, and let's say you were trading aggressively. You're trading counter to your vertical red lines. You don't have your three moving averages stacked properly. They're actually stacked for a short. But let's say you were aggressive, and we're just going to read the trend dots. So you got in on this break above the trend dots. So you can see that there was no threat to the trend dot line. Price was all up here. They're angling up. It came up to the daily VWAP and pulled back. It closed below the trend dots, but this is trend pause because this trend dot's still higher than the one prior. It's not until right on this candle right here, pretty bold candle to the downside for sure. Good strong volume on that. But nevertheless, if you're reading the trend dots, that would have not have taken you out of the trade. And what we'd be looking at here is for the formation of a isolated low within the next 3 to 5 candles. And what we got here, I failed to mark it here, but we've got a tweezer bottom in combination with our harami bullish structure right here. So that would have been further evidence to maybe stay in this long trade. And then we've got a doji here, still closed above the trend dots. And we've got a close, I'm going to say right on the trend dot, trade below the trend dot. And then here is your isolated low right here that I marked. So there's where I'd put a horizontal line. I just do it manually. I'll do the copy, hit Control V for paste, and I'll come over here and I'll set that rate like so. And then price did not penetrate that, at least not yet. I'll move this over here. And then we got the continuation of the move up. We also had our RSI cross above the 50 line. Again, that's this horizontal dashed magenta line. So we had that cross above the 50 line. We've got price closing above the trend dots. The trend dots are angling up. It's so far made its way above the VWAP. So that's telling us that at the moment buyers are in control, and from this point forward we've got some highs here, localized highs. This is not an isolated, fully formed high pivot right here, and the reason is whereas the high is higher than the subsequent candle's high and also higher than the prior candle's high, it's the low that prevents it from being a fully formed isolated high. This low right here is not higher than the low on this candle, and it's also looks like a tweezer bottom. It's not higher than the low on this prior candle. So that's a partially formed isolated high, but I would use them as a reference. Let me just copy that. Control V for paste. I'm going to come over here and I'll put that right on so. So what would be a bullish would be if a candle closes above this partially formed isolated high. And notice how they form, these isolated highs and lows form areas of support and resistance, localized I'd call it. Price came right up to it, so far it's not been able to close above it. We'll just see what happens here. It's 8:04, and shame on me, you know, I haven't looked at what red news might be yet today. We could have an 8:15 red news event, and but then I'm not in this trade anymore, so I'm not at risk of that. I always want to be as I always say in the back of my mind, FAR, F-A-R, and that's first assess risk. That's our number one job, and I failed to do that by not looking at what's on the red news calendar today. Okay, I'm going to put this on pause because I want to see what price intends to do here, to see whether this followed through and moved up, giving you an opportunity. Because remember, we were looking at a couple of things here. We had a tweezer bottom right here that I failed to mark because these two, the low of this black candle is equal to the low of this green candle right here. And as a matter of fact, we can find that out. I'll hover my pointer right over the black candle, and let's look for the low. The low is 70.25, and over here the low is 70.25. So that's a perfect equal bottoms on these two candles. There we go. It's poking its head above this isolated low. I'm sorry, isolated high. Notice the RSI. RSI line is sloped up. And we're getting a good bit of distance above the VWAP. And here's our 5-day moving average right here. This is the 5-day moving average. Strong volume, moving up. Remember, our aggressive entry would have been back here, right? Now, it would have been a contrary trade, a counter trade, because it was against our verticals. But if you're just reading strictly your candles versus the trend dots, that's where the trend dots are so important. And I've got traders who use nothing but trading off the trend dots. So let's say it broke above here. So let's say our entry would have been there. So our maximum favorable excursion so far would have been $275 on one mini, and even more. Let's just see what it's going to do up here on the 5-day moving average. Have we hit $300 profit yet? Yep. Just hit $300 profit on one mini contract. And I always look at the clock. It's 8:07. And as I said before, I'm not sure what we've got in the way of red news. Okay, I'm going to put this on pause for a bit to see how this plays out, and then I'll bring it to an end. Okay, we had some satisfying price action here. By the way, I looked at the red news calendar and I didn't see anything of significance on that calendar for today. $437 on this move, the aggressive move here, if you will. And notice that we had a vertical green line here, the thin one, which means our 15 crossed above the 30. And remember, we talk about looking for pullbacks, right? So, and you can look for those on either of the vertical greens as well as the red verticals. But here, a pullback would have been back to this area. A typical entry for me would be a pullback to the trend dots. Yeah, we got a further pull down here, but it would not have been enough to stop me out based on the size of stops that I use. And then we had a resumption of the trade to the upside. We now have a solid vertical line. So you'd have another opportunity to look for a pullback after that solid and then a possible continuation to the upside. You know, a decent trade here, a decent trade over here when we had that gap down. Let's see, did we measure? I think we measured that already, right? So if the entry was on that gap down right here, we would have not known that. Really, I'm going to say an entry here. I can't remember exactly where I entered, but that one gave us, I think we measured it, $350 range. And then this one here. So that would have been of course, we're doing this in hindsight, but this would have been a nice two trade, probably enough for the day, right? You could shut down your computer and be done. Now look at this strong buying volume. I say buying, it's supportive on the move up. Nice angle on our trend dots. They're spreading apart. We're up here playing with this 5-day moving average, the dim gray line right there, that bold one. And as I mentioned in yesterday's review, that's something I've put on my charts at the suggestion of a fellow named Brian Shannon, who's written two good books that I recommend you get. They're not cheap books, but one's on the anchored VWAP and the other one's on multi-time frame analysis. And you don't see it here, but I have a similar chart to this off to the side for a 6 and a 12-minute time period. So I'm going to cut it off here. It looks like we had some rejection up here. We're up at a recent high over here, as you can see. So it's playing with this recent high to see what it wants to do at 12 minutes after 8 on November 7th. And so let me move this off to the side for now and out of the way. And if I move to the next chart, it's an encouragement for you to take a look. If you look down below, it gives you the opportunity to sign up, and it doesn't cost you anything. Sign up for Ninjacators free indicator of the month, and it's one of the best deals out there as far as indicators, as far as I'm concerned. What it allows you to do is to pick up an indicator that generally sells for, you know, in the $100 range, and at no price, at no charge. And it's definitely a way to save at least hundreds of dollars on some really useful indicators. So click on that and make sure you subscribe to us, and look forward to future trade reviews. Thanks for coming.